everybody. This is Joe Cusick with the Cusick Group with your Thursday Traders Exclusive. Well, we had the overnight markets over in Asia and Europe were mixed, a little bit to the downside, especially in Asia. Gold continues to have some traction to the upside, and you're also seeing that oil's to the upside, as well as some of the fixed income areas are also holding up well. But you still have equities firming up, and so there's this mixed market, this thought process that really is uncertain. And the reason why I say that is for the first time in the last few weeks since I've been talking to all of you on Traders Exclusive, we see a rising volatility market. And this is going to be very critical for both the bulls and the bears, but really for the bears' hopes of a more significant decline. And I'm going to watch the 17 level very closely on the VIX. Now, without a push above that level at 17, the chances of a steep decline in U.S. equities, it's going to be slim to best. It's going to be well less than probably 30–40% at that juncture, especially if you're watching the S&Ps. We'll get to some critical levels, but when you look at it in relation to the S&Ps, you're looking at that support level of right around 2040. Now today it's trading right around that 2050 level, up about 4.5 points now that as I'm doing this. But again, you want to see volatility in the market in a divergent path. And right now they're actually moving to the upside in conjunction with each other. And so we want to see a test on the S&Ps of that 2040 level, which happens to be the 50-day moving average. Now, there's a couple other things that you want to also keep an eye on is the oil markets. And why you want to watch the oil markets is they continue to rise. And one sector that's going to be impacted, obviously not impacting the general markets, but one sector that is going to be impacted is airlines. There's been a ton of headlines over the last week or so, now that we're in the heat of earnings cycles, that the airlines have had record profits. We've actually seen this industry fall more than 15% over the last couple weeks. If you look at like the Dow Jones U.S. Airlines Index, it's pulled back, and these rising crude prices are going to start to put pressure on these names. Now, it's going to be interesting going into the spring season and the travel season whether or not this is going to continue, and if in fact you start to see in futures earnings, or the forecast is that they're drawing down their forecast. This will be very interesting in this cycle. There's three notable stock names that I want to talk about today, and then I'm going to leave it off. I saw some interesting activity in three names, relatively bullish, and I want to point them out because I think this is how bulls are going to be positioning themselves going forward until there's more clarity on what's going to be the upside catalyst. First name is New Gold, trading at around $4.41. This is a gold and copper mining, small mining entity. But what I saw was very interesting. It's a June expiration, buying the $3.50 calls. They're in the money by almost $1 with the stock trading at $4.41. They paid for $1 for it. So their break even is right at that $4.50 level, and there's about 3,000 contracts that traded. I want to watch this one closely, especially since they don't have earnings until July, so there's really no catalyst other than the fact that gold and miners have been moving to the upside lately. Let's see if that catalyst continues into June expiration. The next one is TripAdvisor. As I had just noted, crude's bouncing up, but we're getting into that travel season, and this is where people are going to be booking hotels and airlines, and TripAdvisor could be a benefit of that. Now, they had earnings yesterday, and in the after hours yesterday, the stock pulled back in the 58 and change range, opened up this morning at 64 and some change. So it came off of those lows with some strength, and is trading right now around that 64 and change level. And I saw some interesting activity in the June expiration cycle. 1,500 of the $67.50 calls traded, and again, for about $1.80, you're seeing a consistent theme. There is conviction that there could be some bullish momentum to the upside, but not enough to buy the stock outright. They're buying these options that have fixed risk over a fixed amount of time. The final one is Yahoo. And now Yahoo has been all over the map due to the fact that there's a lot of discussion of what or whom or how Yahoo is going to be bought, broken up, whatnot. Nothing has happened at this juncture, but there was a very interesting trade that happened early in today's session. 1,000 of the August expiration cycle, 41 calls traded for $1.43. Now the stock was trading right around $37, so these are out of the money, and you have time on your side. Again, there's some conviction that the stock is going to be trading well above $42, $43 into the summer, which means that there is a strategist willing to put risk premium out in a potential upside move in the stock, and the catalyst could be someone purchasing them or whatnot, earnings or something happening in that sector. So we want to keep an eye on that, and you're seeing that while there's conviction still to the bullish side with all of this activity that I'm seeing, there's not conviction that to buy the outright, in other words, the stock outright, and that to me is a little bit worrisome. So watch that VIX level and keep an eye on that activity. That's going to give you some ideas of what institutional traders are thinking. All right, everybody, thanks a lot for listening. This is Joe Cusick from the Cusick Group, wishing you a great rest of the trading day. Take care.